All right, guys and girls, testing one, two, three, testing one, two, three. Let me know if you can hear me. All right, all right. First and foremost, welcome to Live Space, everybody. I know that for those of us in the U.S., it's almost midnight here on Saturday in New York. Obviously, 9 for those in Cali, and early morning for you in Europe, and afternoon for you guys and girls in Asia. Um, But anyway, look, man, there's a few of us, and that is okay. This is recorded. My purpose is never to draw 20,000 people to a live space or a live on YouTube. If I can reach one or two or three of you, my job is done. Look, this is going to be a continuation of the video I made earlier today. Hopefully, you all had a chance to watch that video where I showed you. I labeled the prop firm, like winning, how to win or pass a prop firm challenge, right? And that was all about the mental aspect of it, right? So this is going to be a continuation of that, a little bit different angle from it, especially we want to replay Friday's action and kind of talk about it because I think it's not just about the prop firms, but this is just trading in general. And I wanted to show you a visual on why you are constantly having struggles, right? As a trader, why you're struggling, right? But let's just kind of get into it. So, what you see in front of you is the ES Mini on Friday's action, right? So we all remember this, right? The 50% and then down and then the big rocket up, right? But what we're going to talk about is just looking at the chart at certain areas and then looking at what trades we would have taken and what they could have yielded you and the reason why many people fail to take these trades or fail to stay in the trades and whatnot. So the first area I want to talk about is, let me highlight it, is right here. So we're going to talk about right here, right? So you can see this circle, this yellow circle on your screen. And this is around, let's see, 11 o'clock, right? This is when we rejected all the 50, came back up, broke through it, and then came back, retested it, and then shot up. Because, look, many of you have probably seen my tweets or my posts when I said, hey, if we break above 50 and we maintain it, we're gonna go for outside day, right? This was the outside day, right? We tagged it around almost 1 o'clock, like 12:50 U.S. season time, right? So we did outside day at 12:50, and then we went up and made some more, right? We actually broke up the monthly high as well. But the point is this, right? If we're trading this breakout, right? Many of you might have gotten in here, right? This at 11:10, right? Because the normally what we do is that we wait for the breakout, we wait for a close above it, and then we trade the next candle. Or we wait for the breakout, pull back, retest, failure to go back down, and success to maintain it, we go back in, right? So this is the classic breakout, pull back, retest, and then go back up. What I wanted to point out on this is, look, on the 5 minutes, we have the EMA clouds, right? The EMA clouds turn slightly bearish around the 10:25, 10:30 time frame, and then flip back to being bullish again. One thing to note here is, look, the clouds are bullish. We did not break the clouds. Another thing to note is that, while we had this movement up, we came back down, and there's 1, 2, 3, 4, 5, right? So from 11:15 to about 11:35, 20 minutes, right? 20 minutes, we had a downward trend, right? Pretty much a pullback. This here is a doji or spinning top. Really depends on how you look at it, right? What that means is that, hey, we just had the last 3 to 4 5-minute candles, we had a downward movement. We had a spinning top or doji, which usually signifies a shift is potentially coming, right? That is, another thing to look at. And the third thing to look at is that we were retesting this 50%. And you can see that, hey, we had a decent rejection from buyers on the downside, the wick, right? The other thing I want you to look at is, if we look at multiple time frames, we will see different stories, right? So you can see this is the 5 minutes, right? You see it 5 right here, 5. All right, let's go to the 15 minutes and see what we see. Ooh, when we look at the 15 minutes, it looks sexier, right? It looks even better. Why does it look better? Can somebody type in the comment section and tell me why you think this is a very, very different perspective? Just type it. I want you all to think about this, right? I'm trying to give you a hint. Just look at the candle. Tell me, what do you see on the 15-minute? Somebody. Like multiple things, right? If we talk about the clouds, we talk about 50%. Just tell me what you see. Hey, thanks, Rasco. Yes. Perfect, right? Look at this 15 minutes, a hammer, right? On the 5 minutes, we go back. It is a spinning top or doji. But the 15-minute shows us a hammer, right? Look at that. So we had a massive move up. Then we had a doji, right? Potential change in price. But then we had this, push down, and then we got brought right back up, hammer. Same thing on the next 15 minute, push down, brought right back up, right? And not only that, it was off the 50%. In addition to that, what is it riding? Look, the clouds, right? It's riding the clouds as well. So this is really the 8-9 EMA. But let's change it to another. So a hanging man, this would be a bearish candle. Every white candle on my chart is bullish. Every teal color candle on my chart is bearish. A hanging man would have to be actually a bearish. On your guys, platform, it would actually be a red candle, right? It would have to be a red candle. But again, the white candles on my chart signify a bullish candle. So no, this would not be a hanging man on this. This is actually a hammer. Does that make sense to you, Tiffany? Let me know. I'll keep going on, but until you type something, and I'll come back to the comments. But yeah, that's the difference, right? Whether it's a bearish or bullish candle, right? Okay, great. So now we're in the 15-minute. We just saw that, right? 15 minutes, we see that, we have a strong buy up. Let's go to the 30 minutes. Oh, what do we see, guys and girls? What do we see? Do we see anything? Tell me, what do you see now on the 30 minutes? You see it? Type of 1 if you're following along. Type of 1 if you see what I'm seeing. Boys and girls, you see what I'm seeing? Type of 1 in the comment section so I know you see what I'm seeing. I'm just rotating my mouse on this so that you all can see it. All right, cool. Thanks, Rascal. Yeah, look. So this is another hammer. So now we have a 30-minute hammer, right? So we had 30-minute up, 30-minute up, right? So fail two down on the 30-minute. This signified, right? This is a fail two down. It came down, it failed, came back up, made a hammer on 30 minutes. This was another two up 30-minute candle. And then we had a inside bar, right? This is an inside bar on 30, right? Inside bar because it didn't break the high or low. And they initially started as a down, got pushed back up, ate up, became a bullish hammer, right? And then, now we had an inside bar, 2-1-2 up, right? This is our two up, 2-2 continuation, and then another hammer, right? So anyway, the point is now you see it, right? So this is actually going to be our 1-2-2 up, right? Or 2-1-2 up. So all the different combinations, right? But the point is that if we looked at the 5 minutes, it was not as easy to see versus the 15-minute, right? 15-minute made it look a lot easier. 30-minute definitely gave you conviction, right? Yeah, so sure it was an inside bar, but it was a bullish inside bar, right? Bullish Harami. And many of you would have been like, okay, we just rejected off that 50% on multiple time frames with long wicks on the bottom. That gives us our conviction to go long. Now let me switch this to the 1 minute. Again, right here, right? This is highlighted. So on the 1 minute, honestly, many of you would not have taken this long. This right here, this up, breakthrough. Many of you probably would have been, okay, we broke through 50%. This next candle, massive. And you probably waited right about here. You probably would have went long somewhere around here because, it's not going higher, and then went up. And then you would have got scared out when it came down, right? Because this, by the time you entered, right, somewhere around here, it was, a 3 to 5 point move depending on when you got in. If you got in up here, you all definitely would have been scared. Most people would have been scared, right? If you got in 43.93 and they came down to 43.85, I mean, that's not a 10-point move, but it's about a 7-point move. And I mean, if you go heavy, right, if you go max contracts on any prop firm you're trading, you would have got liquidated. But the point is, if you would look at the 5 minute, it shows you a different picture, right? And we see the 15 and 30 and whatnot. But the point is this, right? If we only trade on one time frame, you're never going to see it all, right? This, you may have been like, okay, on the 5 minute, it looks like it's stalling and we might reverse back up. But when we went to the 15 and when we went to the 30, it gave you that big, strong confidence that, hey, this is actually bullish. The bulls are there. The buyers are there. They're buying it all up, right? And that's why I always say that, look, trade on multiple time frames. And you'll see things differently because each time frame gives you a little bit different piece of the story. Or it can give you a lot of pieces of the story that pieces into one big story versus just one little tidbit. Let me just read what you guys got. Fill two down, two candle. Yep. Yep. Good. No, it's good, Tiffany. That's the whole point of this, right? Is to show you the strat, right? In addition to this, we can look, if you guys are ICT traders, fair value gap traders, whatever you want to call it, right? There's a fair value gap right here, right? This is the fair value gap, right? F and G. In the balance between the candles, that would be the 10 minute. And this would be the imbalance between the 5 minutes, right? Another imbalance in here as well, right? So we can say that we hit the imbalance here and then rock it back up, right? But I don't really utilize the fair value gap like a lot of people do. But the point is this. Now we see this trade, right? And I apologize. That was 10, 15 minutes just to show you this particular area and why we would take it long. And why, if we saw this on multiple time frames, we would have went long, but many people still failed to take this and failed. Even they went long, they still failed. And they still got a loss here, or they went out red. And why is that? Well, okay, let's just say this. So we're on the 5 minute time frame right now. Let's just say we entered, we broke through, wait for, close above the 50%, wait for the next candle, and oh, the second candle, 5 minute candle was red. So we're like, okay, the third minute five candle. Oh, it's also our green. Apologize, green, green, green. Okay, three green candles. All right, and then you might have been okay. I'm gonna wait here, and then like, okay, it's not coming back down. Let's just say you entered here, right? Most people, that's what most people have done, realistically, right? Most people have really probably entered here, or maybe somewhere here, but let's just say we entered here, right? Entry. And what is it? Enterprise. Okay, we entered here, right? So that is going to be our at 43.89, right? And let's just say you're on the 1 minute. Here's the thing, right? You're on the 1 minute. You would enter somewhere here, right? And then when it went down, it went down about 4.5 points, right? And many of you would, like I said, on 1 minute, you all would have started getting scared. You're like, oh no, it's starting to reverse, right? Because this 1 minute just looks pretty bad, right? Especially this candle right here. This 1136 candle, it went from 43.88 all the way down to 43.85, right? 3 point candle. And that would have scared many of you guys out. And here's the thing, right? So let's just do what you're gonna see the calculator come on screen. Look, many of you are not trading, unfortunately, not trading one ES. Let's just say, you got in and this thing went down to, went down 4.5 points, right? So every point on ES is 4 ticks. So 4.5 points, we're times them by, we've been, actually, each point is 4 ticks. So 16 ticks for 4 points plus another 2 is 18 ticks, right? 18 ticks times 12.5, right? You have been down $225 per contract. And many of you, if you wrote one contract, you'd be fine. But let's just say you were trading 5 cons. Now you're down 1125. Let's say you were trading 10 cons. You're down 2200, right? And that is, unfortunately for some of you, pretty much at the liquidation rate. And many of you would have cut it out. Or you would have got liquidated, and some people like to trade even heavier, right? Some people will go like, hey, I'm gonna go 15 cons, right? And then that would have liquidated you on the smaller prop firm challenges. And this is why many of you get scared out, because even though, let's just say you're trading let's just say you're trading 5 cons, right? When you see this number in front of your screen on P&L, you get scared. You do. Many of you get scared out, and you want to cut it because you don't know at this point. We see minus $1,100 on our screen, and we'll just go right here, right? When you see nothing but this on your screen, you get scared, right? This scares you, right? And then you see this number, this number, right? This mentally scares you because you're like, oh man, the 1 minute is breaking the clouds. This is such a massive bearish candle. And then we just broke through. It was a false breakout, pulling back $1,100 down. I'm gonna get out. But again, right? And that's why I say if we go to the 5 minutes, right? It's a doji. Go to the 15 minutes, it's a hammer. Right? Go to 30 minutes, it's still a hammer. But the 1 minute is what gets you guys all, right? Many of you are still trading, especially on your prop firms. You're probably in this 1 minute. And then when you see that dollar amount, that's what gets you all, right? And that's why I say, look, you need to look at multiple time frames and you need to size appropriately, right? If we were just down 225, most of you can handle that, right? That's no biggie, right? 225 on your account is not a big number. But when you are seeing, 5 times this, even 10 times this, or 15 times this, that's when you start getting scared and you can't hold through it. And unfortunately, some of you can't hold through it, not because you mentally can't do it, but because the prop firm challenges don't allow you to, just because you get liquidated. And then you see what happened with the rest of it, right? So after, if you were able to hold through it, look, look, this thing just ran up all the way, right? And that's what I'm saying. Like, it's trades like these is what gets everybody, right? It's trades like this that you all see, you all see it, you literally see it, but you don't take it, or you take it and you back out of it, because what you let control you is the fact that you're looking at a time frame that gives you a different picture than what other time frames are, and then you're letting that dollar figure in front of your face scare you out of what's really happening, right? If you've seen me before, I would say ride the clouds. As long as it doesn't break the clouds, you should stay in the trade, right? Sure, it hit the cloud, never broke it, and we can go up here. Went back in the clouds, never broke it. Up here, it went back in the clouds, never broke it. This is 21, and it finally started breaking it at the end of the day, right? But there's multiple trades again, right? Even when we broke high of day, you can say, hey, we broke it, came back. Many people will probably start shorting it here, and it didn't come down. And you could have taken this up. Again, people didn't take it because they're afraid of it, right? And you see the dollar. And that's why I wanted to show you with this video. Like, we're just really get focused on this right here, and just the dollar value, and looking at different time frames, right? And that's why I put that earlier video out saying, look, if you're prop firm trading, you don't need to make this whole move, right? You literally could just waited for the retest, and then just played the retest and then the up. And the reason why I say that is because, look, let's say you didn't get in here. You're like, okay, this ending cloud's not breaking. It's starting, just looks like it's consolidating, and you're like, hey, I'm gonna play this candle here, right? Even this one candle, right? It's 5-point move, right? 5-point move. And we'll just do the math again, right? 5 times 4, because each point is worth 4 ticks, times 12.5 is $250 for one contract, right? So for one contract, you could have made your daily profit target for the 50K challenge, right? The 50K challenge, you need $3,000 profit target. You need 20 days to do it. It's $150 a day, and you would have just made $250 off one con, right? And that is literally just one candle. That's a bare minimum, right? Let's just say you took this thing, up to outside day. Now it's at 23 points, right? 23.5, 23 points times 4, plus another, let's just use that for math, right? So one contract now would have gotten you 1150. So that's kind of what I wanted to show you all. This is the reason why you are all losing, right? You're stuck on this time frame, this 1 minute time frame, which I told you I don't trade on the 1 minute. It's garbage in my opinion. Even if you're scalping, it fakes you out, right? You can use it for your entry, but you should never use it to stay in the trade and whatnot. You need to look at the 5, the 15, and 30 for day trading. Anything longer than that is going to be for swing trading. But as you can see, you all had this trade right. I know many of you seen this trade. You're like, hey, broke the 50%, play it, especially because, look, on the 1 minute, broke it here, failed, came back down. Next one closed above it. Strong candle here, and you like, okay, this looks good, consolidate. I'm getting here because it, couldn't push any lower, came back up. You were right, and then you were green for a little bit. You started coming back down. You start getting nervous, and then all of a sudden it comes back down more, and then this big candle here, you would have gotten scared and you would have closed out. Type of 1 if you agree, right? Mentally, if you agree that you would have gotten, stopped out, right? Or exited. Like, I don't know if you actually took this trade or not, but I would say that many of you would have been afraid of this trade. And that's why I want to try to change that mentality, right? Size appropriately, size smaller, size consistently, and understand what the trade is telling you, right? Right. We just made a massive down and it failed and it came back up, right? So most likely we are reversing trend. And these are the things I want you all to start focusing on, right? This is the hard part. And that is what we're trying to do here in the nation, is show you to look at the price action a little differently, right? And we, not only did we talk about multiple time frames, giving us different confluences with this in terms of the hammer, we talked about the clouds, we talked about the number system, right? With the 1, 2, 2 up, the 2 inside bar, etc. The momentum has shifted, right? Look, they tried to break it. Clouds flip right back to bullish. So there's just a lot of things that tell us that it was upside. But again, many of you just probably were not able to hold straight. And it's the same thing here, right? You probably got, a little bit nervous here, got scared out. Because, look, it is a decent sized pullback, right? Even if you got in here, this was like 8 point pullback, right? And even if you went long, let's say you went long here, right? The double bottom, right? This is essentially a double bottom. Many maybe went long here, but then when this thing came back, this wing went all the way up down here, all the way up, and then came back down, you know, 18 points, you're still positive, but you got scared. And you're like, okay, I'm gonna get out. But again, if you look at different time frames, you can see that it was not at any point bearish. It's a correctional move. And this is the things that we're trying to avoid by looking at different time frames, right? We can even go on the 1 hour, right? The 1 hour, you can see that, at this 11 o'clock, same time frame right here, see? It is a very strong bullish candle. So that's why I want you all to look at different time frames and to size appropriately, because you will be able to stay in trades longer. Right? That's just that's just how the Power One works, and how the benefit of it works and whatnot. Again, you didn't have to catch the whole move on the downside here. You didn't catch the bottom here and go way up. You could have just waited for the 50%, and you would still make good money. And you don't need to catch this entire move up either, right? Like I said, I just showed you. Even if you would have got these two candles here, let's see what that would have been. That would have still been, a 7 to 8 point move, which is more than enough for you on one contract, right? But that's all I got for tonight, boys and girls. I wanted to show you this because, again, this is not just about prop firm trading. This is about trading in general. Many of you see the trades and you just don't take it, right? We talked about the 50%, right? The first time we tapped the 50%, we knew it wasn't just a breakthrough. You could have played the rejection. Many of you didn't because you're afraid, because you're like, hey, I got in, I'm a little bit red. But you didn't play the rejection because you're afraid, because of the time frame you're looking at and the dollar amount you're trading. Tiffany, the EMA, so the clouds here are the EMA clouds. So it is the 8 and 9 right here. The middle is 21 and the bottom is 34. That's when the clouds are green. When the clouds are bearish, then the 8 and 9 are the bottom here. 21 is always in the middle, and 34 is in on the top. And then the yellow line and the blue line, or the teal line here, is the 50-day moving average, and the yellow line is the 200-day moving average. So those are the moving averages I use. Other than that, everything else, I have volume. You can see volumes down here. And then I use, normal highs and lows and 50%, on the daily, weekly, and monthly. Those are pretty much it. And then just reading what the candle does. And then I'll draw trend lines to tell me what I'm doing. But that's, other than that, I don't use anything else. Hopefully that answers your questions. But if you guys and girls have any more questions, type it out. I will try my best to answer it. Other than that, I don't have anything else. I just wanted to show you this. It's not about this particular play. It's just about the mind aspect of it, the mental aspect of it, right? Just go into your trades with the appropriate sizing, with an understanding at looking at different time frames, what the candle was like, the price is telling you, and then knowing that, look, we were made a low. Here's the lower low, right? And then we broke this swing high, so change the structure. So higher high. This low did not break this low, so higher low, higher high, higher low, higher high, higher low, and then higher high, higher low. So, right? So you all have seen this, right? And then higher high, higher low, higher high, higher low. So, it's just, don't forget the basic stuff you all learned, right? And now we've broke this. So if we look at a bigger time frame, we broke this. This was a change in structure, right? Change in structure here, change in structure here, change in structure here. Now if we go all the way back, let me see where the next one is. It's all here. Change in structure here. We broke this one, right? Change in structure here, broke this. We broke this as well. So it changes things, right? So that's what I say. Now we're like, hey, we're taking all liquidity up. But yeah, that's all I got. Like I said, when I try and draw this out too long, just wanted to give you that glimpse to let you know, um, these are the things that we do here in Nation, right? This is how I trade. Look, I told you I trade on 6 different time frames, and I look at the clouds. I look what the price is telling me. I look where it is in relationship to price levels, and whatnot, and look at the volume. That's it's plain and simple. It takes some time to get used to. It takes screen time. It takes you all practicing and willing to take the trade and take the bare minimum trade you need. Right, take one con if you need to and go with it. Right, because I know for a fact if you would took one contract on futures, if anybody who's trading prop firms on futures, you would have been able to sit and ride through that. Right, minus $225 is nothing. Right, most of you probably will sit in trades for minus $500 to $1,000 on one con on a prop firm challenge because that's how many people trade, right? So you would be able to sit through that, and if you would just watch the clouds and the price action on the 5, 15, and 30 minutes, you would never have gotten out of the trade. You're like, okay, this is just pulling back to the clouds, and then it just got to rock it up. But yeah, that's it, boys and girls. Like I said, it is 12:20 New York time now, so enjoy your rest of your evening, and we'll get ready for tomorrow. That's it. I will take last minute questions. You have it. If not, enjoy your day. And again, as always, thank you for joining the live. I know it's late. And one last favor, if you can, just hit that like button and leave a comment. Right, it helps get the video out to everybody else. Hopefully somebody else will see the video and find Nation just like you all did, some shape or form. So, all right, that is all I got. Thank you. Enjoy your day. I will talk to you later. Bye.